The next chart is for Royal Sun Alliance, RSA Insurance, and this is going to be a very important lesson on price gaps. Now, what a price gap is one day the price will close at one price and then it will absolutely gap down and open the next day at a much lower or much higher price. And in this instance, it opened much lower. Now, what traders say is gaps always get filled. We've got a price gap here, and what we mean by gaps getting filled is the price will trade below a gap like this. When it starts trading in the range of the gap all the way up to where the gap occurred, that then is called a filled gap. So what will often happen is the price will come back up and effectively trade in that range that the market jumped out of. So that would be a filled gap. Now, traders say that price gaps always get filled, and we can look at this gap here. The price, when it got to this price here, would have filled that gap. There was another price gap downwards, and the share price went up and filled that gap. The price then went upwards for quite some time and had a huge gap down. I think that was on dividend day. And then the price went up, and do you know what? It is so close to filling that gap that we would actually say that that gap is filled. Since then, we've had a gap down, a little bit of price movement, then another gap down and another gap down. So far, we've left the gap on the way up, just here, but we have filled one of those gaps. That gap has now been filled now. So every gap so far throughout history on this chart has got filled, but lately there's a few left open. So the gaps that are left open, we would expect them to get filled eventually. That's not a guarantee that they're going to go up at this point. However, this price here, 117, is a valid trend line. What you often find when you get a gap filled, the price will go up, fill the gap, and then get sold and come downwards. That's what happened on this example. We left a big, huge gap. The price went up, filled that gap, and got sold and come back downwards. That is probably what you will get with RSA. If this share price goes up to 117, which is where that horizontal trend line is, and also where the biggest next gap is, you'll probably get sold at this point. So that will be a fantastic time to sell the shares because you would likely get at least a pullback in this company. The gap up the top will probably get filled eventually, but maybe more of the long term. So this is something very important. Gaps get filled eventually. So you must not make a decision on your trading portfolio based on a gap because it may not get filled for a good year or two. However, most traders actually ignore gaps altogether because of this reason. But gaps do provide very good trading tactics if you know how to trade them. And we would expect 117 to get hit at some stage in RSA. And remember, once the gap gets filled, what will often happen is it will get sold off and then it's done its job, it's filled the gap, and now it wants to go back downwards. So do pay particular attention to where gaps are because they can well be very good places to buy or sell at a profit. But we will show you the dangers of trading just because of gaps.